where I think kind of my viewpoint around environmental action really started was probably my job, my summer job, and how I paid my way through university, which is planting trees in Canada. And for people that don't know Canada, most of the forested land in Canada is crown land, so it's owned by the government. And if you are a company and you're looking to harvest that land, you have an obligation to replant, to reforest. And so how that is typically done is every spring and summer, forestry companies will hire, hundreds of students, thousands of students to go replant trees. And it's the ultimate piecework. So you get paid by the tree. But there's a hitch is if you plant or a tree improperly, you get dinged. So you get paid by the tree. But if you plant that tree improperly, like you have to go replant that plot of land. And so it's backbreaking work. It's the worst conditions possible. It can be snowing and 35 degrees on the same day. In some cases, the terrain is awful. The bugs are terrible. But if you're willing to work, you figure out that the magic recipe is volume and quality. You want to plant the highest quality, highest volume of trees in the quickest amount of time possible with the highest quality possible. And it's really framed my entire view on environmental markets and environmental action. To me, environmental action has never been about going to protest or throwing paint on a painting from the masters, right? It's doing the work. It's going out. If you care about something, do something about it, and doing something about it physically.
All right, welcome back to This Week in Carbon. My name is Rene Velasquez. I'm the host for today's episode, and I'm delighted to have a friend on the pod, Yvan Champagne, who is the co-founder and chief carbon officer at Carbon AI. Yvonne, pleasure to see you again. Welcome to the show.
Thank you. Always nice to see you, Rene, and big fan of the podcast. So thanks for having me on.
Oh, great. Well, it's a pleasure to have you on. I'm really excited about the conversation today, man. We've obviously been chatting across a number of different angles commercially. And every time that we speak, I walk away from it just super, not only inspired, but also taking away some really pivotal lessons. And I'm hoping that we can do one of those masterclasses with you today, but specifically for our audience's benefit.
Great.
Why don't we start just at the beginning? Just give the folks some context in terms of your mission at Carbon AI, what you're trying to achieve there, and a little bit about your background, if you wouldn't mind indulging me.
Yeah, for sure. So at Carbon AI, we are, I think, just entering our 5th year. And our mission from the get-go has been to try to help our partners, our customers, project developers in the industry create the highest quality environmental commodities possible. And the way that we have attempted to do that is to work with other like-minded players and infrastructure providers in the carbon and in the greater environmental markets ecosystem to really focus on high-quality data. And that's really born out of our viewpoint that synthetic commodities, which environmental commodities are, right? It's not a physical commodity. It's not something like a bushel of corn or a barrel of oil, but where you have products that aren't delivered physically, that those commodities, more than anything, what determines their value is the quality of the data. And if you have poor data, then you have a poor quality instrument or commodity. But if you have high quality data to underpin those commodities, that's how you make something really robust, really sustainable, and durable for the longer term. So that's really been kind of our key mission, what we've been working on.
How does that interoperate or correlate to essentially a digital twin?
Yeah, it's a great question. I mean, so digital twin is a concept that's often used in various sectors. So if you have a plant, right, you have a digital twin of your plant, which basically creates a virtual world, if you will, of how your plant operates. And so it is something that in manufacturing, for example, has really emerged as a really powerful tool to help you diagnose problems before they arise, determine where you may have bottlenecks, where you may have issues in your system and your process. But I would say that in environmental commodities, the kind of service that we provide is colloquially known in the industry as DMRV, so digital measurement reporting and verification. I would argue that it's much more than a digital twin because a digital twin of a plant, of a manufacturing plant, isn't running your process. It's not delivering an outcome. It's not creating the output. It's just giving you a synthetic view of what's happening. Whereas in our technology, in our software, we are helping create. We are actually helping create that instrument, that commodity. So it's
So
much
you're not only
different.
just tracking all of the attributes digitally, but you're generating them and
Absolutely.
then tracking.
Exactly. Because if you think about for an offset credit, for example, how do you create that offset credit? Well, you take data inputs, whether that be data that's collected manually or digitally, you put that into a methodology or protocol, which helps you derive an outcome. And so with our software, we're able to ingest various protocols and methodologies. Taking in all that data, we're able to actually deliver an outcome, which then gets fed into a registry like a Vera or a GCC or eco registry or something along those lines that delivers a final product. But this is a key input that helps deliver that.
Okay, great. So just can you walk me through then and our audience through the DMRV component and how you guys are trying to tackle this? Because I
Yes.
really like how the framing around the focus on quality and you called it synthetic
Mhm.
commodities. You know, these are digital commodities, right? Like
Yes.
carbon
Yeah.
credits are really the absence of pollution of a colorless and odorless gas. Like it's
Right.
a very abstract concept. And so we definitely need to have the traceability to demonstrate the actual performance of these projects, right, across the various
Right.
different technologies. So can you just walk me through a specific example, let's say methane avoidance or cook stoves, and how your technology sort of works in that context to capture that data and then be able to provide that information around the quality?
For sure. I'll maybe start by defining what we think a high quality instrument or high quality outcome looks like.
I think that's a great
From our
idea.
perspective, what that looks like is a an end product, a finished good that you can trace fully from source data all the way to the outcome. And you know where all of the various data inputs, where they come from, where that data is derived, and you can prove immutably that no one has altered or manipulated that data. And so how we attempt to do this is we have three primary tools in our suite of tools or ecosystem, which is a tool we call Proof, which is the first piece, which is our calculation engine. So in Proof, we're able to ingest methodologies, protocols, whatever outcome you're able to derive. We're able to ingest that protocol digitally, and we're able to render the calculation in there. But in order to render those calculations, we need good data. And so we rely on a tool that we've designed called Field. And what Field does is it is a data collection tool or a first mile data collection tool. We're able to take data, whether that data comes from a manual process, and we're able to collect that data digitally to timestamp, user authenticate, and geolocate every single
Hmm.
data. So we know where the data comes from, who collected it, and when it was collected. And we can prove immutably that that data is actually real. We can also connect into sensor networks, IoT, SCADA, whatever systems there are, ingest that data again, combine it, run it through proof, and then derive an outcome. And that outcome, and this is, I think, the exciting part for us. I think one of the things that we like to pride ourselves on is that we work well with others. We really try to understand who are the major infrastructure players in the space. We try to figure out how we support them. And so we're really excited. We're working with a number of registries on DMRV pilots and first missions, if you will. And so what we try to do in that context is, hey, we will deliver this piece, but at the end of the day, rendering that outcome, delivering a serialized credit, that's typically a registry function. We're not a registry, but what we
Hmm.
help do is ensure that that data from source to outcome, that it is true, real, fully auditable, and fully authentic. And so the third piece of our technology is what we call View. So View is a configurable dashboard that we can provide to various players in the ecosystem to give them a full transparency, if you will, of the functions and the inputs of a project. So an example of a stakeholder could be a verifier. So if we think about carbon 1.0 or 2.0, whatever analogy you want to use, and what we think the process should look like going forward, carbon 1.0, 2.0, very manual, very analog, a lot of reliance on things like paper,
Yep.
spreadsheets, right, which are not an immutable tool. Excel, who doesn't love Excel? But Excel can be manipulated, can be changed, and you can't prove that no one has altered a cell, for example, right?
Hmm.
And so what that process really looks like, I think from our standpoint, is one where again, no one can mess with the data. But with View, what we're able to do, this is really the paradigm shift, is a verifier, for example, and or how verifications have been done to date in the industry, is that they will have the chance to look at a sliver of data, a very small sample of an overall project, and they will determine an assertion based on that small sliver of data. With our platform, a verifier now has access to all of the data. It's all available to them right in front of them. They have full unfettered access. They can trace every single input and output and where it came from, how it was calculated. So it really creates a much more robust data set to that particular stakeholder. Another stakeholder could be a buyer, right? I think, offset projects, especially biological projects, these are living, breathing systems. And if someone, for example, has a contracted offtake on a project and they're not sure how much volume they're going to get, we're able to provide them real-time access into how that project is performing. So it's just a different level of information that is available to stakeholders that need them. So that I think
That's
that's something that's really exciting from our standpoint.
That's really, really interesting. Can I go back to proof and
Yeah.
just ask in terms of and obviously, yeah, some of this will be commercially sensitive, and some of the work that you're doing is obviously you won't be able to discuss. But I'm curious about the intersection with the standards and their registry partners, and how this tool can provide leverage. And so I'll frame the question in this context. You mentioned really one of the key issues that's afflicting our market, which is that so much of it historically has been based on paper documentation.
Mhm.
And then subsequently, the review process is also desktop based,
Mm.
reviewing and reading copious reams of data, and then ultimately making a decision around certification, right? And
Yes.
I think that's just the historical context. I'm wondering whether your tools can actually be leveraged by the standards to create a higher throughput, so more efficient processing times, and so compressing the timeline that a
Mhm.
project is in validation and verification, and whilst without compromising on the integrity piece because of the
Yes.
immutability and the level of transparency. Can you walk me through how that may be occurring in practice?
It's an excellent question, and I think it's one that we get asked all the time. And that one of the fundamental challenges of the greenhouse gas sector and carbon markets in general. And I'll use an infrastructure or a semiconductor processing analogy.
Hmm.
If you think a lot of the standards upon which we determine and create environmental commodities, they come from about 2006, right? So ISO 14064, for example, was first published in, I think, 2006. The first methodologies that came out, shortly thereafter. So if I think about a laptop that you and I use, and what chip was powering those laptops back then? I think it was like a Intel Pentium chip back then. If you think of the processing power of that chip, and if you tried to run a modern application with a Pentium chip from back then, like you couldn't even probably run Excel at this point, right? Or Outlook, right? The technology is advanced, the processing power, everything has advanced to such a greater degree. The current the processor chip in our laptops today, I think, are at least 15 times more powerful than that chip. But you think of the offset industry, we are
Hmm.
still using tools that were designed 20 years ago, but we're trying to do something very different. Think of the volume of offsets that were created in 2006. Now think of the
Totally.
volume credits that were generated this year. But also think about the next step, Rene. How many reductions, how many millions of tons do we need to create to hit our goals, to hit our targets
Yeah,
worldwide?
we've got gigaton scales is what we need.
Totally. So we're trying to do something much, much bigger with tools that are just not designed for what we're trying to do. They're not built for purpose. It's not to say they're bad tools, but they need to be improved. They need to be modernized. We need to increase effectively the processing power of the entire system. And verification is exactly one of those things. If you think of the major challenges in the voluntary carbon market, when things were super frothy a few years ago, what was the
Hmm.
bottleneck? It was issuance and it was
Yeah,
verification,
yeah,
right?
and even registration as well
And
further
registration,
upstream.
right? So So
Yeah.
project developers were trying to get thetheir tons to market, not enough verifiers.
Buyers are trying to set up accounts. There was just huge bottlenecks in the systems. It just wasn't set up for prime time.
100%.
So we
So
need systems. And I think that there's a
exactly.
recognition of that within the standards. I think that overall they've been doing they've been under so much scrutiny, right?
Yes.
I'd hate to be a CEO at one of the standards just because of the amount of scrutiny that they've been facing, which ultimately atrophies the system because
Right.
they are not willing to compromise on the integrity piece. Because if you look at it from a distribution perspective, that 1, 2, 3, 5%, whatever it might be, that
Mhm.
is, questionable around potentially overcrediting, et cetera, that's what gets picked up in the media, and that's what then damages their reputation. So they're so
Yes.
risk averse that they're not willing to compromise on that, and they want to get 100% or 99% confidence with regards to what they're delivering. That results with a significant burden in regards to time and processing. They're double checking, triple
Agreed.
checking before they actually approve. Whereas I keep thinking about a future where we harness sort of an industrial type of model, ingesting vast reams of data,
Mm.
harnessing, firstly standardizing those processes, right?
Yes.
And I think that we had this chat with Joe DeLofano, CTO at Vera, on the podcast a
Mhm.
while back, and he was talking about the project hub and the digitization of methodologies is a really
Yeah.
important paradigm shift. And then the project hub essentially digitizing the inputs through that system. And then ultimately you could have a view of a world where the project level data is ingested, and like you're talking about around what you guys are building. And then it can all be reviewed through not only machine learning and artificial intelligence tools that we're using to provide leverage and fast, higher throughput, but then any deviations then goes to the expert teams to look at it. So it's like a
Yes.
conveyor belt, right? You're building a
100%.
factory, and then you just have everything. If it's within tolerance, then it just keeps going down the conveyor belt and then keeps going to the next bit, next bit, next bit. Anything that's a deviation either gets taken off and reviewed, or chucked out if it doesn't fit, doesn't work. And I think that that's a much better approach in terms of how to scale rather than the very bespoke nature that we currently have. So I'm just curious in terms of kind of bringing it back from my kind of sort of layman thinking about it, but to how you're actually implementing it through your tools, and ultimately how that immutability through tokenization is helping to usher in that carbon 3.0 future.
Yeah, I mean, I think our perspective has been to leverage technology as much as possible to digitize and automate where possible so that every person, different players across the ecosystem can do more. That's the goal. So with our platform, it conforms to ISO, right? You still need third-party verification. That's a critical part of the process of creation of an environmental attribute. That's never going to change. But it's the type of work that a verifier can do. They can do a lot more. They have access to so much more data, and much higher quality data that I think they can deliver a higher quality assertion, but more importantly, they can be more productive, right?
Yeah.
And it just changes the nature of a verification mandate from one that has typically been kind of a batch process that is really hard to scale to one that is more of a continuous process where verifiers are continuously
Hmm.
engaging with the data in a project. But it's not like you have these peaks and valleys, which you typically have in compliance markets, where there's a mad rush to finish compliance reports for the year end or before a compliance period deadline, right? You can really smooth out that work, which means a verification team, verification body can be far more efficient across time, right? And that
Yeah.
should be ultimately all our goal. Every player in the ecosystem, we should be trying to do is do more. That's what we need to do. We need to deliver hundreds of millions of tons and do it faster, better, and cheaper. That's our target. Everyone should be doing more. So, our platform doesn't take away any work from verifiers. That's not what we're trying to do. But what we hopefully do is help them do their jobs better. And you talked about registries, right? Like we applaud Vera and others. They're trying really hard. Vera's doing some really cool stuff around DMRV. We're really happy to be working with them on a couple pilots right now. One of the coolest things that they were able to do when they have projects that are using a platform like ours that is higher integrity, higher quality, is that they can move to high frequency issuance,
I
right?
was going to
You
say
don't get
just
these
about that. That's the
bottlenecks.
kind of dream, right? It's like borrowing a
Absolutely.
page right out of out of Rex, where instead of
Right.
having, as you were talking before around peaks and valleys, I was thinking not only the market cycles around boom and
Yes.
bust, but ultimately like the issuance cycles. Like, okay,
Yes.
so a project,
Yes.
especially like Red Plus projects, will wait 3 years for issuance and
Yeah.
then just dump an entire
Mhm.
like 3 years batch onto the market. It's
Yes.
lumpy and it creates this distortion with regards to prices. We've seen this really interesting backwardation in some instances where the
Mm,
older vintages that are available at spot are trading at a premium to where the forward issuances that are coming up
interesting.
will be placed, and it's just a factor of time value of money. And I want to come back to that
Right.
piece around how we applied time value of carbon later. But it's this interesting concept. But if we had like a Rex model where you had a PPA, you had that forward offtake, and the project was constantly monitored. Anytime that there was
Mhm.
a deviation or a reversal risk, it was easily and early identified, and then you could just output, tons on a regular
Yes.
cadence, whether that's weekly, early weekly, quarterly, and now your you could build smart contracts behind that, and also then
100%.
accounting, it becomes a lot easier. Instead of having one big lump sum that's at a procurement event, you structure a bilateral, you do your due diligence, you have that. Now you've got that contract, and then you automate that contract, and then you start taking delivery in tons at a time, as opposed
Yes.
to hundreds of thousands or millions of tons in a lump sum, which just eases the cash flow burdens as well as the companies. Right?
Well, and it
It's kind of
helps.
the dream that I hope we get to. Just a digital
Yes. I
factory
mean,
of the future.
but it helps, I think you had Mark Stewart on one
Hmm.
of your previous podcasts, and he made a great point, which is like the carbon market's kinda like an art market today, right? I think that was the analogy used, which I thought was a fantastic analogy because
I caught up with
carbon's
him
art. Yeah.
yesterday, and he qualified that. He said it's the voluntary carbon market that is the
Yes.
art market. Compliance
Yes.
markets are much more stringent, and his words were, "If you don't comply, you go to jail." It's a very
Yes.
simple kind of paradigm, but yeah, for voluntary is an art market, which is kind of interesting.
But
You
even more
and I both
so.
have some art behind us. So talk to me
Yes.
about the thesis there.
I mean, but even more so if you're creating instruments for a compliance market, if you're a compliance buyer, why like and this is I think Alexia Kelly said something similar about this on one of your previous episodes of like people who aren't in carbon who get exposed to this sector for the first time. They have these moments which is why are you guys doing this? How does this work?
Yeah, so
How the
complicated.
heck build a business around this? And so that's the kind of stuff that if you're creating, sure, you can run an art market for the voluntary market because no one goes to jail if they don't meet their compliance period. But when you start meeting or having these very strict obligations and deadlines, this industry, if it's going to hit its potential, needs to operate like a real business, like a real market, with the tools and professionalism and infrastructure and efficiency that a market of that size requires, right? And I think
Yeah,
that's what we're trying to do our part to help make that
yeah,
happen, hopefully.
I like that. It ultimately comes back to this concept, right? Look, we're trying to deliver emission reductions, avoidance, like removals at gigaton scale because of the
Yes.
magnitude of the problem. And if we
Yes.
stay in a very bespoke and kind of niche corner, then we failed in our mission.
Yeah.
Right. And so now we need to harness without compromising the integrity because that's integral.
Yes.
But we bake that in as a core tenet, which we have now through core
Mhm.
carbon principles. And now it's about achieving scale. And I think
Yes.
systems like yours are really interesting and fascinating. Do you mind if we pivot just slightly?
Yes. Please.
We've spoken before about this
Yeah.
concept, and I really want to share it with our audience. And it's essentially the concept of time value of money and
Yeah.
time value of carbon, right?
Mhm.
Being interlinked. I'll set it up, and then I want to get you to sort of expound on it.
Right.
But essentially, the core idea of a time value of carbon at its first principles is essentially a ton of CO2 is not neutral to time. And
Yep.
when it is emitted or avoided, materially changes the impact on the climate system. Just as a recap and in context for folks that may be listening who aren't climate scientists, and I'm certainly not purporting to be one. Climate change is driven by a cumulative effect of
Yeah.
atmospheric concentrations of greenhouse gases. And it's not just the annual flows. So if we emit a ton today, it contributes to warming immediately and for
Yes.
decades, depending on how durable that greenhouse gas may be. In the case of methane, it's longer duration than, say, CO2. But if we emit a ton later, we've effectively delayed that warming impact, right? So too with well, basically, same concept is in terms of removals is later down the
Mhm.
line. We're trying to suck it out of the atmosphere, which is a little bit more difficult from a physics perspective. But if we avoid a ton today, we prevent that entire cumulative effect. And so the concept around what I've been grappling with and what we've discussed before is avoidance today has got a disproportionately higher climate value because it prevents that cumulative warming, right?
Yeah.
And so I want to kind of frame that there, and then I've got a
Mhm.
bunch of other points that I want to make around kind of the fashion cycles of the market, and we're in this one where removals are much hotter
Mhm.
than avoidance credits. I want to get your thought on this time value of carbon concept,
Yeah.
firstly.
Yeah, for sure. I mean, and listen, like, so my concept in using this frame for me is something that didn't just pop up overnight. I mean, I've been in the industry for over 20 years, and I would say that it's almost like a synthesis of my understanding of what our mission should be. What are we trying to accomplish, right? And everyone who's in the space and in carbon markets should be focusing really around one goal. It's how do we remove or mitigate gigatons of carbon or other greenhouse gases? How do we mitigate the most or the largest quantity in the shortest possible amount of time at the least possible cost? That is what we should be driving to do. And so, if I think of like how for me this concept really crystallized itself was really, starting my career sourcing forestry projects. I have it's kind of a funny story, but how I ended,
Tell us.
if I think of where my journey in carbon started. I mean, I've been a geek on climate change, since junior high. I think my first science fair project was on the greenhouse effect on acid rain, sorry. And my second, I think in grade 8 was on the greenhouse effect. So I've been, it's been near and dear to my heart for a long time. But where I think kind of my viewpoint around environmental action really started was probably my job, my summer job, and how I paid my way through university, which is planting trees in Canada. And for people that don't know Canada, most of the forested land in Canada is crown land, so it's owned by the government. And if you are a company and you're looking to harvest that land, you have an obligation to replant, to reforest. And so how that is typically done is every spring and summer, forestry companies will hire, hundreds of students, thousands of students to go replant trees. And it's the ultimate piecework. So you get paid by the tree. But there's a hitch is if you plant or a tree improperly, you get dinged. So you get paid by the tree, but if you plant that tree improperly, like you have to go replant that plot of land. And so it's backbreaking work. It's the worst conditions possible. It can be snowing and 35 degrees on the same day. In some cases, the terrain is awful. The bugs are terrible. But if you're willing to work, you figure out that the magic recipe is volume and quality. You want to plant the most, the
Mhm.
highest quality, highest volume of trees in the quickest amount of time possible with the highest quality possible. And it's really framed my entire view on environmental markets and environmental action. To me, environmental action has never been about going to protest or throwing paint on a painting from the masters, right? It's doing the work. It's going out. If you care about something, do something about it and doing something about it physically.
Yes.
And so, to me, like if I think of young people who are really passionate about climate change, to me, like that's the first piece of advice I typically give. Like there are some NGOs doing great work and that can be a path for someone. But if you really care about climate change, go get your engineering degree, go be a forester, go get your business degree, figure out carbon markets, but get involved doing stuff physically. And I think this time value of carbon concept for me and kind of where it kind of emerged was, I spent, somewhere around 14 years at Blue Source, large greenhouse gas project developer, generalist firm in North America. And my time there was fantastic. We were a generalist firm. We worked on pretty much every single project type you can think of: ozone depleting substances, biogas, biomass, forestry,
Mhm.
methane mitigation, energy efficiency, CCS, you name it. We worked on it. So we got to work on some really cool stuff. But as I got along or went through my career, I think my focus started to sharpen around what am I doing? What impact am I
Mhm.
actually delivering? And it kind of framed and where it crystallized for me was I want to be as efficient as I can with the time I have left to have the biggest impact possible. And this is where the concept kind of just came up and thinking about time value of money and how, you
Yeah.
know, an NPV is a calculation of what's the value today. It's the value of something today, and something that is more certain is more valuable. And the longer something
Okay.
goes out, you've got to
Yeah.
apply discount factors. And I started thinking about
Mhm.
climate. It's like, man, like If we do stuff today, it is far more powerful for the environment than something we do down the road. And then I started thinking about, okay, well, what is most important? And if you read the IPCC reports, if you understand the science, methane is at the top of the list. And why? Well,
Yeah. Super
methane
pollutant.
has, it's a super pollutant, but methane's very interesting, right? It has a GWP value over a 100-year lifespan of, some people think, I think the latest is, I think we're up to 28, could be a little
Mhm.
higher based on the last IPCC report. But over a 20-year period, methane has a GWP value of 84 to 92, I believe, or 86 to 92 times CO2. Why? It has a residency period in the atmosphere that is shorter, but when it's there, it has a much bigger impact. So if you think of what we're trying to do today in climate, right? We've got these 2050 targets that most people have where we want to get to net zero by that time frame. So what do we need to do? We need to buy ourselves time, right? Because we are going to overshoot. And if you look at all the data, we're going to overshoot anyway. But why methane becomes so important, and this is an analogy from the electricity sector, but there's a concept called peak shaving, which is, hey, if you have periods of the day where you have higher load, if you peak shave, then you don't need to build more generation, right? Because you don't have to build to meet the peak. So if you shave the peak, then you require less generation. The same concept applies for climate. The next 20 years are absolutely critical. So if we reduce more emissions today, right now, specifically on superpollutants, specifically on molecules that have a greater forcing impact over the near term, like methane, we buy ourselves time. We buy ourselves time to bring along, removals, CDR, right? That is going to come down the road. It's going to take longer to build. It's going to
Mhm.
take longer to scale to drive down the economics for that to really make sense. But what can we do today? So if we had $1, if you're an investor and you're trying to get the biggest bang for your buck,
Mhm.
where would you spend it, right? So people think about investments that way, right? Where can I generate the highest return? And to me, this is why this concept needs to get more widely understood, not just in compliance markets, but also in the voluntary market, which is if you're serious about climate change, you need to understand the time value of money and you need to look at your portfolio. What are you buying? And if you're just buying removals that aren't going to get built for 20 years or 10 years, and they're going to generate only a little bit amount of reductions, or you could spend that same money and get high quality methane mitigation today. That is far more powerful to the environment, right? So if that's what
Mhm.
you're looking to do, if you're trying to generate the best return, right, from a climate standpoint, we need to invest in that near term mitigation, the stuff that can actually move the needle today. And that's really kind of, it's why, my last few years at Blue Source, we really focused on methane, at least the kind of stuff that I was driving around methane mitigation in the oil and gas sector, because that's where you get the biggest bang for your buck. Not just the financial side, but in terms of results and outcomes and impact, right? That's what
Mhm.
moves me. So I think that's how I understand the concept, Renee. It's really a frame of reference to have people step back, look at the greater picture. What are we trying to accomplish? And I know it's so easy, and I think for voluntary buyers, and I totally get it, right? Everyone gets seduced by the charismatic. And the CDR community has done a fantastic job marketing what they're trying to do. Why? Because it's a great story, right? Whether it be enhanced rock weathering or, you name your pathway. It's a great story, right? You're going to be removing CO2 either from the atmosphere or some other
Yeah.
means and storing it. But that's not enough, right? And there's a
Well,
place for that. There's a place for that in a
yeah.
portfolio, right?
I like your analogy around the investment thesis because when you look at portfolios today across really large, let's say institutional investors, it's
Yeah.
primarily in highly liquid markets. Most of it is in public equities, and then you kind of go up and you look at private equity, etc. But you when you compare that to venture capital, right? The early stage, hard to do stuff, the quotients are far smaller. So I equate it in that
Yes.
context. Like we need to be allocating the capital today
Yeah.
in a very prescient and like a fiduciary, right? To like you
Mhm.
said, to methodologies, technologies that are actually going to move the needle today
Mhm.
in order to avoid more and more emissions going into the atmosphere. That should be the hierarchy. And this is espoused in the Oxford principles, right? Where
Yes.
where you have this kind of transition effect. I think we've forgotten for the part in the market over the last couple of years, this tenet. But we need to be avoiding those tons before they go into the atmosphere. And at
Yes.
the same time, and I think that this is certainly the case with the sort of the large and very sort of prevalent corporate buyers like a Microsoft and Google and the Symbiosis folks, also underwriting investments in
Mhm.
other critical areas like nature-based
Yes.
removals, and to a lesser extent the really technologically difficult stuff that's nascent, like direct air capture, potentially enhanced rock weathering, and then kind of coming down that scale around durability to the things like biochar, which are scalable. And
Yes.
there
Sure.
should be a portfolio approach. That allocation is going to be subject to like the portfolio manager, but in this case, the corporate around their allocation risk. Obviously, the things that are much more scarce and where it's crowded tend to have a very
Mhm.
high price premium. And
Yes.
so when you have a strong balance sheet and a really sort of large revenue versus sort of emissions profile, maybe you can go up that kind of curve and start to underwrite some of those early stage opportunities and hard to
Yes.
do things. But if you're a big emitter and relatively lean margins, i.e. airlines, you're not going to be doing that. So the context here is really impressive, which is, yeah, focus on the things that actually deliver results today. Focus on the things
Mhm.
that you could do at scale with integrity whilst doing it at lowest possible cost. And then you go up the marginal abatement cost curve. It's a logical progression. And so,
Yes.
so that makes a lot of sense. But I really like that framing around the financial analogy, right? Of like
Mhm.
you said it today, in time value of money, a dollar today is greater than
Mhm.
a dollar tomorrow. And in this case, ton avoided today is greater than the ton that's removed later. And then
Yes.
I'd say the one last thing I'd say is to corporates who may be listening and folks that are influencing those corporates, think about it purely from what does a corporate need when they're looking to structure offtake deals? They're looking for price certainty and
Mhm.
certainty around the supply, right? So like
Mhm.
it's the tenor of the price that they're concerned about. And they do a lot of due diligence on projects in order to then find those projects that will end up delivering in the timeframes that they need,
Right.
2030s in particular. What happens if there are issues with that future
Yep.
project? Like you said, the discounting component
Mm. Mhm.
in finance. Yeah, those projects are not guaranteed to be issued. They may be
Right.
delayed because of certification issues. And we started talking about that at the beginning of the conversation, right? With sort
Mhm.
of the inefficiencies of a paper-based approach. And then there's geographic and geopolitical issues, and we're seeing that and living in a world that's dynamic with a
Mhm.
war raging today in the Middle East. And so, that you have to discount for those future values. So if you're a corporate trying to secure that supply for the 20s, why don't you do it from a distributed portfolio, but skew it towards things that can actually
Yes.
deliver with a higher
Yeah.
degree of certainty,
Mhm.
and you can probably do it at a lower cost. And so that's the broader thesis, and it's not framing it in an avoidance versus removals context,
Mhm.
but but it's also sequencing, right? Avoidance and removals, but
Yes.
sequence the avoidance and prioritize that first, then do
Absolutely.
the removals.
Yeah, you're 100% right, and I think for us, the way I look at this is, you know and this is I think somewhere where the voluntary market has kind of, I would say it's maybe had a negative impact, where it's introduced, elements of charisma, how charismatic is a project type. And
Yeah.
and this is where we move, this is where we go to the art market as opposed to, you know, a real
Yeah.
market, which is, when I think of offset quality, the sum of, the gold from my mining, if you will, to borrow an expression from Steinbeck, is really quality, the correlation for quality. High quality means, for me, is high quality data. How do you get high quality data? Those tend to be metered projects where you know exactly how much methane, for example, has been sequestered or conserved. That's why flare gas conservation, from my standpoint, it's one of the highest quality project types because you know exactly how much volume of gas you've prevented from being emitted to the atmosphere, right? Super
Right.
high quality. But is it sexy? Is landfill gas sexy? No, but both
No.
those project types are methane. The impact for the environment is so huge. And I think that's one of the things I'd love to see happen in the voluntary space is getting that bigger, maybe reflection from players to understand, wait a minute, if I'm building a diversified portfolio, if I understand the time value of carbon and impact today is more important than impact tomorrow, then yes, everyone should have methane mitigation as part of their portfolio. To me, it's an absolute no-brainer. And guess what? You're absolutely right, Renee. It tends to be cheaper because it's not sexy. It's not seen to be as sexy. But some of those projects are the highest quality tons in the market,
Yeah.
have the potential, sorry, they have the
Yeah, no,
potential
no.
to be the highest
Duncan
quality
Van
tons.
Bergen, I had him and Donna Lee on on the podcast a few months back from Calix, a global.
Yes.
Duncan calls it the sort of the methane projects like the ugly ducklings
Yes.
of
Yeah.
carbon
Yeah.
markets,
Yeah.
but the avoidance component is unimpeachable, right?
Mhm.
The counterfactuals in nature-based projects are getting much better in terms of the dynamic baselines and that sort of stuff. But they're difficult because they're dynamic systems in nature and highly variable. But in these infrastructure type of systems, you can meter it. You can overlay
Yes.
that with drone and other inputs that can actually show you the plumes of the methane, and you can actually
Yes.
see that materially through the satellites as well.
Mhm.
And so there is that correlation that it's actually much more measurable, and like you said, the quality of the data then begets that higher quality of those credits. To your point, I just think and I think maybe we're around the corner after this, but it is these types of projects have an important position within a
Yep.
portfolio. And it's again kind of bringing the financial narrative or the investment narrative. Like, you'd be crazy not to have the S&P 500
Yes.
represented in your portfolio. That's
Yes.
what this stuff is, right? You can
Yeah.
invest in the next, when Perplexity lists, you want to invest in that. It's like early stage opportunities, right? And everyone thinks that they'll pick that stock, but ultimately you want to have diversification through an index in
Yes.
finance, and in this context you want to have diversification through portfolio management, but these types of credits have a real place in the world. I'm
Agreed.
just conscious of your time.
Yeah.
You sent me a message earlier around some of the thoughts around what you wanted to discuss. I want to get to the last point that you had sent to me, which was, I wanted to talk about sort of innovation coming from emerging markets, i.e. the global
Yes.
South. I'd love to learn more about what you're seeing, because obviously from
Mhm.
your side, you're working with a number of project developers across the global South. So give us some context, and then try to bring back the conversation around the realities of what you're seeing on the ground.
For sure. So, I think it's been one of my biggest joys, of being a carbon AI is that we work globally. A lot of our work, a lot of our clients are in Africa, the Middle East, Southeast Asia. And when I was at Blue Source, most of my focus was in North America. So I didn't get a chance to really get outside the country. And it was always interesting in AIDA events. You get to meet, the folks working
Yeah.
on European markets or, back in the day, CDM. And it would always be
You got
very
dancing
interesting.
with people in Madrid. That's where we met. It was
Exactly.
classic. Still one of my favorite
So
nights.
So that's been fun, but I think one of the most interesting things for me, most exciting things, and why I'm excited, I think, about a greater role for the global South in carbon markets is around innovation. And the analogy I've used is, if you think of the telecom sector,
Oh,
North
yeah.
America, Europe, we had to build landline infrastructure, right? We put a lot of wire up, a lot of poles to basically deliver telephones or telecoms. And in parts of Africa, right, they've been able to skip landlines. They've been able to go straight to wireless. Or, as my partner and our CEO at Carbon AI, Ryan Arsenault, talks about sometimes, is we're able to go straight to satellite, right? And this
Yep.
is the great thing about carbon, is that you have these countries, whether it be Nigeria or Kenya or Ghana, who are embracing technology. They're not beholden to this 20-year-old infrastructure, right?
Yeah.
That exists elsewhere, that is almost sclerotic. They are looking at, how do we achieve our targets? How do we attract investment? How do we ensure that we will win this race for capital to decarbonize our economies? How do we do this? And they're really embracing technology. And this is, I think, what makes me so excited about working with some of these great players in some of these countries. I think of Papua New Guinea as another great example, the
Oh,
Philippines,
yeah.
where they're leaning in to technology. They're not scared, or they're not beholden to, well, this is the way we've always done things, so we're going to keep doing it this way. It's like, how do we do this? How do we scale? How do we do this quickly? How do we attract capital now? And so I think they're seizing this moment of, hey, we need to do this. We need to do it now. And so I think that to me is super exciting. And I think it's bringing different voices, different perspectives into the carbon market, which is always great for any industry. So I think that's one piece I'm super pumped about.
No, that's cool. Yeah, I've actually seen that live and on the ground, and it's really interesting. There's lots of different analogies, but yeah, for context, for folks that may not have traveled to sort of remote parts of the African continent, for example, your point is salient. And not only did it occur with telephony, but it also occurred within financial systems like microfinance and ultimately like actual payment systems. But effectively, these economies did not, like you said, invest in the early technologies and then have to amortize those investments in infrastructure over time. They just basically skipped generations, and then they went from, instead of having poles with wires across long remote distances where you didn't have a market and you just couldn't stand it up, then they went straight to mobile telephony. They could have a tower every 10 kilometers or whatever it might be, and then it could ping various different cell phones. People didn't have landlines, they just went straight to cell phones. And then so you look at a country like Kenya, they've got 90 something percent adoption around mobile telephones in the country. It's been this incredibly democratic wave and process. And then you overlay that, the opportunities around financing. Not every bank could actually set up a brick and mortar bank in these townships and these small towns and villages across the country. But instead, then you had payment systems like an M-Pesa, mobile banking, and you could pay somebody like you do in the US, Venmo, but they have it in Kenya, M-Pesa. And so they just skip generations. They skipped the generation in telephony or wires and copper wiring, and they went straight to mobile technology. And now many of them are actually taking advantage of satellites, like you said. We had a Starlink when we were in some very remote locations, just most recently in South Africa. And the now takes away the disadvantage of distance. You can literally be anywhere in the world and still have communications anywhere in the world. So it's just this incredibly democratic process. I hope that we see that moment for carbon markets where the lessons of the past are still, and I think what we're trying to do at This Week in Carbon is try to provide that platform, which is kind of like historical documentation, where we document them just for study's sake. And then folks don't repeat the mistakes of the past, but also that we can just bypass some of those technological infrastructures and not have to replicate those same mistakes, and just bypass to the next generation. And I think we're seeing that. I think there's evolution of different standards and registry ecosystems, like you're talking about, how on your platform you guys are using the digital MRV tools. These are paradigm shifts in a market's history, and I think will ultimately yield great results. To the point around countries being welcoming for these technologies, ultimately the capital that comes along with them, that's the critical piece. I think bureaucracy in countries can oftentimes create perverse outcomes where they dissuade investment. Just case in point, one of my teams at Carbon Exposure needs to get to a project in India, and the visa process took an inordinate amount of time. It should be an easy piece to try to get folks there to be able to tell stories.
For sure.
Cool. So that was a great conversation. I really enjoyed it. Do you have any final comments, any final thoughts to share with the audience?
Yeah, I mean, if I think, like, again, I've been in this industry a long time, as have you, Rene, and I'm
calling us
the reason I'm still in it is it's kind of a vocation, right? Like, there's a mission here.
Yeah, there's a mission.
We need some great people.
Alignment and purpose that exists in the market. People that are really smart are attracted to this space, and they're foregoing it's the big checks that they could get in some other industry, whether in tech or investment banking, but they're doing it because they feel that there's a passion.
Yes.
I completely subscribe.
If we want to attract people to this industry, which is really, really important, it has to be an industry that is sustainable, that doesn't go through a crazy peak and then a crazy down cycle where you shed 80-70% of the people, the companies in the space. And we believe the way you get there is by ensuring, if you think of, where the big drop off came in voluntary markets, I can think of two really big scandals that happened. One, it was probably the South Pole project in Zimbabwe. The second would be, the Sequest scandal around cook stoves. And, both of those things happened because of, I think, lack of transparency, lack of auditability, not enough role-based governance around data. Sequest, a very sophisticated company, as was South Pole, but things happened. And why? I don't think they had the right checks and balances to ensure that the outcomes that they were generating were actually real. And so I think that's the thing that we're most excited about, and how we're trying to contribute is to provide the tools to ensure that these emission reductions that we're creating, which are so important, are in fact real. I'm really excited about the work we're doing on clean cooking, where even in a low technology environment, which is, rural Africa, that we can track cooking cycles on stoves. We can collect that data in a way that is super efficient, and get very high quality data. And you can make a cook stove project from a quality of data standpoint equivalent to a metered project. That's really kind of what we're striving to do, right? And then that helps ensure the sustainability of that project type and allows it to achieve the potential that it has. But we can't keep having these scandals that rock the industry, that kill consumer and corporate trust in the outcomes that are being generated. So this is why we think this is existential, and the industry needs to adopt. We need to change. We need to get better. We need to ensure that we can scale, we can professionalize this industry so that what we're delivering is not going to be something that drops off every 5 years, but something that can continue to scale. People can stay in this for the long term, and we can help deliver the outcomes that we all need to generate. So I think that's the exciting part. The Global South, obviously, huge player, is going to be a huge player in this. So we're really excited about that.
Great. That's our outro. Thanks very much, man. That was a masterclass. I really enjoyed it. As always, enjoy our conversations and incredible insights. Thank you very much for making the time. I hope you enjoy your time in Green Bay, and look forward to having you back on the show at some point in time. For the audience, please give us some feedback in terms of what you heard today. I'd love to hear and have that dialogue with folks in the audience. But otherwise, click like and subscribe. Look forward to having the show come back next week. Cheers.
Thanks again, Rene. Have a great evening.
Pleasure, man. Thanks, man.